Hello, and welcome to the Baird Trust Equity Income Third Quarter Portfolio Recap. I'm John Watkins, the co-portfolio manager on the strategy. Jumping into performance, the table at the top of this slide shows our performance track record. In the third quarter, our portfolio fell 0.6% gross of fees and 0.9% net of all fees, which was in line with the 0.8% decline for the Russell 1000 value. And then on a year-to-date basis, our equity income portfolio's return of 15.4% gross of fees and 14.3% net of fees is slightly behind both the Russell 1000 value and the S&P 500, which were both up roughly 16%. That said, our focus remains on investing for the long term. We don't place much emphasis on short-term performance numbers because they can be driven by things other than business fundamentals. To us, the longer-term numbers, 5 years and longer, are the most important, all of which are well ahead of our primary benchmark, the Russell 1000 value. On the bottom half of this slide, we've listed the top and bottom contributors for both Q3 and the year-to-date period. Moving on, this slide shows portfolio changes we have made over the past year. You'll notice that there's not been much portfolio activity in 2021. So far this year, we have not found many investment opportunities that are more attractive than the companies we already own in the portfolio. We've turned over lots of rocks, we've studied numerous businesses, but so far, other than our purchase of Progressive in the first quarter, nothing has met our strict criteria. I put this quote from Warren Buffett on the right-hand side of the slide, which we strongly agree with. He essentially says that good investment opportunities don't appear on a regular basis. There are times when there are many, and then there are long dry spells where they're very difficult to find. And we are in one of those dry spells right now. Our low turnover approach to investing is extremely tax efficient, which is critical when it comes to the long-term compounding of wealth for taxable clients. I wrote about this topic in detail in the most recent Baird Trust market commentary. So if you'd like to receive a copy of that, please contact your financial advisor. On the left-hand side of this slide is the list of the 5 portfolio holdings that increased their dividend payments in Q3. And then the table on the right shows the dividend characteristics of our equity income portfolio compared to our benchmark, the Russell 1000 value, as well as the S&P 500. As a reminder, 2 of our 3 portfolio objectives are 1, to achieve a higher dividend yield, and then 2, to achieve faster dividend growth than both of these indices. And as you can see in this table, as of September 30th, we are achieving these objectives. Our portfolio has a dividend yield of 2.5%, which is well above the yield of both the Russell 1000 value and the S&P 500. Furthermore, our track record of dividend growth far outpaces the dividend growth of both of these indices. Over the past 5 years, the dividend income from our strategy has grown annually at 11.6%, which is double what the S&P 500 dividend growth has been, and more than 5 times that of the dividend growth of the Russell 1000 value. We strongly believe that this combination of both attractive current yield as well as high dividend growth is critical to our long-term performance objectives. And finally, just a few big picture comments on the portfolio and our outlook. For the most part, Q3 was relatively uneventful in terms of news and stock market activity. However, there are several things to keep an eye on in the final quarter of the year. First, there's likely to be further development of government spending bills and new potential tax increases. Second, the Fed may begin to taper their purchases of treasuries and mortgage securities. And third, there are concerns that the current labor shortages and supply chain issues will negatively impact the upcoming holiday season. So we know that these issues will impact businesses in an unpredictable way in the fourth quarter and perhaps longer. Fortunately, our investment strategy is not dependent on making short-term predictions about the economy or about government policy. We are aware of these issues and we are monitoring them, but our focus will remain on finding businesses and management teams that meet our investment criteria and will help us compound your wealth over the next 5 and 10 years. That does it for the Q3 portfolio recap. We look forward to reporting our Q4 results to you in January. Thanks so much for your time.